Now, I don't know if anyone's watching the silver market today, but naturally I pretty much look at it every day. I don't sit there and study it, but I'm looking at it constantly throughout the day. And it started off nice. Market opened. It was around 34.60 something. Boom. On market open, it goes right up to $35.10. Now, there's kind of a fundamental, I don't want to say fundamental because that's really not the right word. But in order for the illusion of this market to work a certain way, and you study the charts and the Bollinger Bands, and we have the high point and the low point, and if it touches above the high point for such and such period of time, then there's going to be a new high, then the Bollinger Bands go up, and right, that's the illusion. So the government understands, well, we're going to have to manipulate the market, but we do have to kind of respect that from time, we got to pretend that that works too, right? Yeah, you do. So they understood today, and again, this is I think this is from Zero Hedge, which made a good point of this, which is why I printed this. If it stayed above $35 today, Friday, then next week it could go to $37. That's what the charts would say. $37, we should see it next week. So, at approximately 10:40 or something like that a.m. this morning, in the matter of 15 minutes, it pretty much went straight down. From around $35.10 an ounce down to about $34.50. So it essentially lost 60 cents in almost a blink of an eye. Straight down. I'm going to show you, that's the black and white printout here, but you can see this line right here. 10:40 or so a.m. Boom, 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 straight down to about 11 a.m. or thereabouts, 10:55. It was the equivalent, the sell-off that occurred to bring the price of silver down. Just so you know how many ounces or paper ounces it took to bring silver down 60 cents, which isn't a whole lot. It took 62.5 million ounces of silver, paper silver, sell orders started by the powers that be, the elite, naturally, flood the market with sell orders. You got it. Control P, as in control print, like Brand Bernanke does. They have a control S. Control S on the keyboard equals sell, government style. 62 million ounces, 62.5 technically, is the equivalent of 2 times the mining production of silver in the United States of America every year, all year. In other words, yearly supply in America is somewhere around 30 million ounces. And in the span of several minutes, on the COMEX, right, this is an American company, this is our exchange, not the LBMA, really, right? This is the COMEX, America's exchange. Which, I mean, they're intertwined anyways, but we had in 15 minutes a sell-off of 62 million ounces of paper silver. Not one single ounce of that came out of the ground, was already out of the ground, existed or didn't exist. It was a piece of paper, lots of them, selling 62 million ounces worth of silver in a few minutes. If you were the bozo, the idiot, the moron who was playing a futures contract when that just happened. Alright, silver's been doing good lately. I think I'm going to go get a contract because it's leveraged 10 times. I can get in with 10% of what the full contract costs, basically. In other words, 5,000 ounces worth of silver, I get to play with 10% of the money, roughly. Right? I mean, there's the margin fees and all that, but they allow you to basically play with about 10% of what it would really cost for that whole contract. So it's as if I'm controlling 5,000 ounces with 1,000, or with 10% of the money worth required to do that. So if it goes up a certain amount of money, It's as if I had 5,000 ounces and it went up a certain amount of money times each ounce. I'm selling my paper contract and pulling in the profit. That's why so many people just love the paper markets, because you can go to a broker who allegedly brokers you the rest of the money. They front the money. That's what they tell you. We're the broker, and every time you do a buy or sell order, we're charging you, $7 or whatever, $8 per transaction both ways. So buy order, $7. Sell order, $7, $8, whatever it is. Every time you do that, that's their little fee. And they are allegedly fronting you the rest of the money. Now, last time I checked, when you go to a bank and get a loan, or basically someone's fronting you some money, there's some kind of a background credit check, job check. Okay, yeah, here's debt ratio. Okay, you look good, we'll give you the money. Or, no, it looks like you suck, we're not giving you any money. But on these brokerage accounts, you didn't know you needed almost nothing to open one. Almost nothing to open an account. There's no check, there's no nothing. Put 10% of the money in the account and go play. Seriously, you're going to front me the other 90%? Yeah. To make $7 or $8 per transaction of me buying and selling. And I may only buy or sell once or twice in a day. You're going to give me tens of thousands of dollars. Front me that so I can have this contract, so to speak. Yeah, that's exactly what we're going to do. Why? Because the contract isn't really there. There's no real contract. There's no real gold. There's no real silver that this contract, which it says it represents, it is nothing more than a bet. It is a piece of paper that is a betting piece of paper. That's it. I bet that silver is going to rise in the next couple of days, or today. I'm going to buy this bet today, this paper contract, and bet that the price goes up. And if it goes up $1, I just made $5,000 on a contract. That's what it would pay. If the price of silver was up $1 today, $34 open, and when I sold it was $35. In other words, it just moved a simple dollar up. That would be $5,000 profit I just pulled in from playing that paper contract. In order to do the same thing in real life, not pretend paper markets, I would have to go out and buy a physical 5,000 ounces of silver, wait for the shipping, get to my house, okay, got it in the mail, and I had to pay the full fee. I wasn't able to tell the company that sold me the silver, hey, can I give you 10% down, and you just give me the silver. Yeah, it's kind of like it's both of ours. We'll just keep it over at my place. No. That's not going to happen. But you can do that on Wall Street. You can do that on the COMEX. So who the hell wouldn't? It's so easy, a caveman could do it, right? As they say. So if that's the case, the hell's in my dang teeth? If that's the case, that explains why everyone wants to go play the paper markets. That also explains why they made it easy for you to play the paper markets, because they have to use that as the control mechanism to set prices for everything. And they have to always maintain that control. And when prices get out of control, Control S on the keyboard, sell, 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 sell through the government, boom, massive flooding of sell orders hits the market. Other people, again, if you were caught in this 15 minutes of hell right here, 60 cents drop, 60 cents of a drop, you would have been, depending on how much money you had in your account, you would have got a margin call. Because most people, they go buy a contract, they think they're in at somewhat of the bottom of the day or whatever, if you're doing day trading. All right, I'm in right now and I got to stop at, 10 cents below where I'm at. I got to stop, automatic stop put in. 10 cents below the price that I just bought in at. And according to this chart, I bought in at $35.10. So if it goes down to $35, right, $35.10 is where I'm at. So if it goes down to $35, my automatic sell order kicks in. And I'll take a slight beating because it went down 10 cents, so I'll lose a tiny bit of money. And then maybe I'll get back in the market when I feel comfortable. Maybe I can gain that 10 cent, loss back. Now, it's not 10 cents. Because a 10 cent move would be more like $500, I think. Yeah. You lost $500 on a 10-cent move. But remember, if it moved up $1, that was $5,000. So in other words, that $500, that's a small amount I just lost. But my automatic stops were put in place. So I don't have to sit in front of my computer and watch the trading screen. Sell, sell, sell. No. Automatic stop, kicks in, boom. I'm safe. And I'm only taking a $500 loss. But there's a little problem. When a line like this goes straight down like that, it didn't stop at $35 for that little 10-cent loss where my stop was in place. So the stop was triggered up. Alarm bells in my, in the computer software. Alarm bells, $35 silver. Sell, 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 stop. The automatic stop is kicking in. Sell, 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 sell. No buyers. Sell, 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 sell. Still no buyers. Sell, sell, sell. Now it's down to $35.80. Sell, 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 sell. No buyers. 34.80. 34.70 now. Sell, 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 sell. No buyers. 34.60. Sell, sell, sell. No buyers. 34.50. Ding, 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 ding. We got some buyers. And you log back into your computer screen after lunch. Go back, after lunch. Wonder what happened in the market today. Ooh, crap. A 60-cent loss. Oh, thank God I put my stops in at 10. Phone's ringing. Hello. Hey, it's your broker. Margin call. Margin call. I had stops 10 cents down. Sorry, there were no buyers at 10 cents. The market and our software continues trying to sell until there's a buyer. That's in the terms and conditions. There's no way around it. Nobody offers that. It's the way it is. So you're telling me the only time there were buyers was at $34.50, so I took a 60 cents beating. Yeah. So in other words, I lost about $3,000. Yeah. What about my automatic stops? I just explained that to you. There were no buyers at $35, which was 10 cents below where your stop was, $35. Market had no buyers. So there's no buyers when these prices are going down. Yet every day now the price is steadily rising, steadily rising, steadily rising. So there's buyers every day now. I mean, look at the market. Look at the charts. Last few days, buyers, buyers, buyers. Market's climbing for silver. There's buyers. And then all of a sudden, at $35 silver, it smashes down to $34.50 or whatever. No buyers all the way down. No buyers. If that doesn't tell you, for the millionth other reason, another reason to add to your million other ones, as to this market being completely controlled and rigged, I don't know what is. And if you're stupid enough to play in that market, you deserve what you get. So the nice thing is, there are so many people who are stupid enough and will continue doing it, and they will also still continue demanding delivery in the same numbers that they do every year, and even more, it seems like lately, last couple years, more people demanding delivery. In other words, paying for the full 5,000 ounce contract in full. I don't want the 10%. Give me the whole thing. I'll give you 100% of the money. I want to own the physical silver. So those people are going to cause the shortage anyways. And just a little FYI, if it took 60 cents to bring, if it took 62 million ounces of silver, it only brought it down 60 cents. So it took the cartel, the government pigs, aka the cartel, it took them 62 million ounces worth of paper, silver, to bring the market down 60 cents. And the market's around $35. It took 62 million. So in other words, what I am seeing right now, because I've looked at this type of stuff before when they would smash silver, it appears that they have to do a harder and harder hit, which would normally smash the price way down, and it's just barely pushing it down now. Is that because there's so much freaking paper that they've printed out of these paper contracts, so many of these paper contracts out there that it takes more and more and more paper contracts of them selling to cause the same type of downward pressure on silver as it did prior? I think that's the case. And for God's sakes, 62 million, twice the United States' annual production, 2 times that amount was sold in 15 minutes, and it only dropped the price of silver 60 cents. I can assure you safely now that the amount of paper contracts that are out there in the world, from the COMEX and whatnot, versus what they claim they have in store, which we already know they don't even have in store, but based off of what they claim they have in store, even assuming if it was really true that they had the amount of silver that they say they have in these warehouses that back these contracts, it is so highly leveraged, I can't even speculate anymore. I used to think 100 to 200 to 1, and that was kind of common. 100 to 1 was definitely common for a lot of people to think that they were that. In other words, for every 100 contracts, there's only one physical thing of silver backing them, and there should be 100 physical things backing each individual contract. I can safely say right now, looking at this type of data, that there's no way in hell it's just 100 to 1 ratio. And 200 to 1 is probably my new minimum. It's probably much higher than 200 to 1. Which is why they have to sell massive more amounts of paper to bring the price down just a little bit. So, this is good and bad. The good part is, it's leveraged even higher, I think, than any of us thought. Which means the real price is going to explode even higher than we probably thought originally when this comes to a halt and the physical market actually starts setting the price. The bad news is, of course, you're going to get screwed over and over again because they still have control. They still move the market when they need to move the market. And if you think they stopped all of a sudden and JP Morgan, they're out of their short position, you're smoking crack. If the price of silver rises, which it did from $26 to $35 now in a very short period of time, by the way, if that happens, it's because they wanted it to happen. Not because they have CFTC investigation. No. It only rises because they want it to rise. Having said that, Lindsey Williams said they wanted somewhere between $75 and $100 an ounce, ultimately, which will be here shortly, sometime in the near future. They want gold to be $3,000 an ounce. Clearly, the price of gold today versus the price of silver today, silver is going to be the winner, which will bring you the most money back as an investment if you go with silver. And if you just think it's going to go to where the elite said they want it, which is about $80, $100 an ounce or whatever. This data on this piece of paper is telling me something else. It's telling me that the elite can want in one hand and manipulate in the other and see which one's going to crap on them first, basically, in my opinion. And neither are going to matter because the real price of silver will be set free sooner or later. And I'm not talking, it'll be decades. No. I'm thinking just a very few years at the worst. So take that for what it is. You play the paper game, you will lose. You will eventually lose. Thank you.